E-commerce growth is taking off in Australia with nearly $19 billion spent in online shopping last year. That's expected to grow by 9% a year to $32 billion by 2012. And more Australians are using their mobiles to access the internet and look for products and services. But while that growth sounds impressive, it is lagging other countries such as the US and UK. The annual Online Retailer Expo and conference is on this week to discuss those and other issues, and one of those taking part is Laura Chambers, the Senior Director of PayPal Mobile, who's flown in from the US this morning. Laura, thanks very much for your time, and thanks. Hopefully not too much jet lag going on at the moment.
Not yet.
Just to start with, how much is, I suppose, the mobile part of PayPal's business these days?
We've been investing in mobile for 5 years, and we're actually just starting to see it really take off. 2 years ago, we did about $25 million of volume. Last year, we did $141 million, and this year we expect to see $500 million of volume coming through on PayPal Mobile, with about 5 million people across the world using it.
And as we just sort of heard, how is Australia going in terms of, I suppose, online retailing and purchasing and so forth? I mean, those numbers sounded impressive, but
yes.
Are we lagging other sort of countries?
So it's interesting. Australia has been a little bit slower than the other countries in the adoption of online retailing. But what we are seeing is that the Australian consumers are very fast adopters of smartphones, mobile phones, and also of usage of those phones. So actually Australia is the third highest penetration of smartphones in the whole world, just behind just Japan and Korea. So this is probably a great opportunity for retailers to jump past online straight onto mobile and get on board some of the fast growth that we're seeing there.
Why do you think we have lagged? Do we just haven't really got round to it, or the technology hasn't been there for us that's maybe been in some of the other countries?
The technology is pretty broad, so I think that's it. I think it's probably a little bit of a hesitancy. It's a very new form of development, and it takes a little while to skill base of people that can work on it. So hopefully this will be a chance for Australians really to catch up.
And where are we going in terms of the technology? I was reading beforehand about being able to simply swipe your mobile phone or do something in terms of swiping, and you can buy things. It sounded incredible.
There is some great technology happening. There's some great innovations of what we call NFC, or near field communication, where you can basically just tap your phone and transfer information. There are places where you can swipe credit cards. There are places where you can take a photo of a barcode and get some information just through that. So there's a lot of new technologies, and what these are doing, it's really blurring the lines between online and offline. The mobile phone, because you take it with you everywhere, you're basically taking the internet with you everywhere that you go. So it's a really interesting time.
I suppose whenever you're talking about the internet and particularly online finances and so forth, security issues are always going to be a major, I suppose, at the forefront of people's thinking. Are there concerns about security, particularly as we move into the mobile tech side of things?
Yeah, I think that shoppers have become pretty familiar with using their financial information on online shopping, but we see a lot of concern and hesitancy when they move to mobile devices. Not only is it quite difficult to type in your credit card number, but I think people are very concerned about it being stored on their phone. And so that's what we do at PayPal, is we really help by keeping your information really secure. We don't share it with anyone, and it's just stored for you basically in the cloud, so you can access it whenever you need to.
And what about competition? Is it a competitive space? I imagine as you move into mobile retailing that you could be coming up against some of the big providers like a Motorola or Apple or those sorts of people.
Yeah, it's incredibly competitive. It's a great industry. It's really growing very quickly, and we're seeing a lot of people coming up with some great new inventions. We're quite fortunate that we have great traction already, and we have a really solid foundation. We're a combination of both a financial services company and an internet company, and so we can scale really well. But we are seeing a lot of it's a very interesting environment.
All right, Laura, thanks very much for coming in and chatting with us.
Thank you very much.
There's still work to be done with the government's revised mining tax proposal, but many investors are confident that it's already enough to rejuvenate merger activity. How much rejuvenation depends on many other factors, including the availability of credit and the poor performance of some high-profile capital transactions this year. Business Channel reporter Kai Chow spoke with M&A consultant Tony O'Sullivan and asked him if investors in the mining industry are growing more confident about the MRRT.
I think the market is as assured as it really could be at this point. Obviously, there is going to be an implementation and transition program, and Don Argus and, of course, Minister Ferguson are going to be running that process. But I think what it has done is removed a huge amount of uncertainty for investors and the boards of these companies. And I don't think it is expecting any enormous deviation from what has been announced.
Has the mining tax been more of a concern for overseas investors than it has been for locals?
I think it's been of interest for all parties, to be honest. The sort of transactions which indeed the Centennial announcement this morning is not something which has occurred obviously since last week. So those sort of decisions and strategic plans have been in the pipeline for some time. I think it's just as important for Australian companies, domestic companies, and the domestic stakeholders, because it's critical for capital raising and indeed capital projects, capital budgeting and so forth.
Has there been a phenomenon, though, of locals taking a more objective and detailed interest in what's happening with the mining tax, as opposed to foreign investors who might perhaps only spend a few minutes each day considering Australian opportunities?
Well, I think it depends on how finely your offer is. So that comes back to a matter of pricing and why you're actually making the acquisition. So in the case of, for example, a group that's making an acquisition for a company such as Centennial, it might be critically important to you because you're actually importing a lot of your coal needs for the country. And so pricing differences, perhaps you might have more tolerance for that, as opposed to a domestic company where it's really on the margin as to whether or not the investors are going to approve of its acquisition or not. And so then you perhaps have a little bit more scrutiny. But for these large strategic acquisitions by offshore parties for Australian entities where it's strategic, then I think you're going to probably see less concentration of the on the margin to the last decimal point.
Before the business week even began, you said that all we needed to see was one board take the plunge, and then we would see M&A in earnest. So we've already seen some announcements, Centennial, CSR to an extent. So I suppose in terms of M&A across all sectors, is it game on?
I wouldn't go that far. I think that what you'll see is there'll be a relatively small universe of activity around certain target companies, and those companies have been targets for some time. And of course, not across all sectors necessarily. We're going to see the defensive stocks, of course, have been of particular interest, and so health, food and beverage, that's certainly been of interest in Australia.
What would be some of the candidates, I suppose, that we could see some movement with there?
Well, any of the healthcare companies, I mean, on a larger scale, worldwide, we don't have the large pharma companies based here, but you're seeing a lot of pharma activity internationally, as you've got international patents expiring on blockbuster drugs. In Australia, I think people look to the fact that you've got government paying a lot of the receipts that go through the health care company revenue account. Now, wherever you have government as a payer, you have regulatory risk, but notwithstanding that, Healthscope is an interesting example. When I say, a lot of people have said that means it's game on for private equity. I would disagree with that. I would say that there is an example of a target that is in a small universe of concentrated interest because it ticks the box for private equity in terms of the attributes of that particular company, the fact that you can actually break it into a property company and an operating company, and perhaps the market's view on value.
Just going back to the mining industry, if we look across the markets though, they're very volatile. How much would that be weighing on the appetite for M&A, even with the mining tax issue resolved?
It certainly will at the larger end of the game, so at the top end of town. When I say that, I'm talking about very large-scale transactions because... Like
the MacArthur Coal deal, for example?
I would put that in a category of still being strategic, and so therefore that acquisition, those acquisition files I expect would be reopened. I would put transactions which are involving a lot of dependency, if you like, in terms of what's happening in Europe and the States. They're still going to be on the back burner for the time being. But I think what you might actually see in this market is the increased use of optionality, and by that what I mean is companies taking stakes in other companies. So where CEOs and boards may not be feeling so bold as to make a 100% acquisition, we might see a return to the days where people take a 20% interest, a 9% interest, or in the case of foreign parties, a 14.9% interest, and therefore having the optionality of moving further forward if global conditions improve.
Okay, we're just going to have a quick check of the markets to see how we are going at the moment. The S&P ASX 200, it is still in positive territory, which is always good news, up about almost 0.5%. The All Ords up about 1/3%. We really have been going up and down. Really weak volumes today. Light traders. We've been speaking to some of the people over at the broker firm, suggesting that really people waiting to see what happens on the interest rate decision. And on that decision, we will have that live, plus a lot of analysis at 2:30 p.m, just over half an hour from now. So make sure you stay with us, but taking a break at the moment.
Down their hard-earned dollars.
But the U.S. hopes these discoveries produce a gold rush that helps stabilize Afghanistan.
Heading to a break now, but stay with us. Plenty coming up in the next hour.